Hello everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to income from house property. Mr. Shanta resident owns two houses in Bangalore. So she has two houses in Bangalore. She has let out both the houses throughout the year for residential purposes. So both the houses are LOP. She has let out. So house 1 and house 2 are both LOP. So they have given certain details, MRV, FRV they have given, rent received they have given, SR. SR is standard rent. Repairs have to be ignored, municipal tax paid to be considered, and insurance premium paid has to be ignored. On 1st April 2022, 1st April 2022 is our starting of previous year. She brought a residential house for self-occupied. So one more house she has brought for SOP of rupees 10 lakh is the worth of that house. By taking a house loan in Canara Bank, house loan was amounted to rupees 7 lakh. 7 lakh rupees loan she has taken with a rate of interest 12%. Now we have to compute the taxable income from house property. So there are three houses. House 1 and house 2 are LOP and house 3 she has purchased SOP. So first we have to consider the municipal rental value and fair rental value. So in the question they have given municipal rental value and fair rental value. MRV is 4 lakh and fair rental value is 7 lakh 20,000. That has to be compared. Out of this, whichever is higher, that is 7 lakh 20,000, it will be considered as notional rent. Now this notional rent will be compared with SRV, that is standard rental value. So notional rent we have found out it is 7 lakh 20,000. Standard rental value they have given in the question it is 6 lakh rupees. Out of this, whichever is lesser, 6 lakh is lesser, that will be considered as reasonable expected rent. 6 lakh is lesser, it is considered as reasonable expected rent. So that reasonable expected rent will be compared with actual rent. So actual rent they have given, that is rent received 4 lakh 80,000. So 6 lakh and 4 lakh 80,000, out of which whichever is higher. So we will consider 6 lakh as higher. So it is GAV before deducting vacancy period loss. From that we have to deduct vacancy period loss. There is no vacancy period loss in the question. So we will get GAV after deducting vacancy period loss, that is 6 lakh rupees. From that you have to reduce the municipal tax paid by the assessee. So in the question they have given that municipal tax paid for house 1 is 40,000. 40,000 is the municipal tax. The remaining balance will be 5,60,000. It is considered as net annual value. Now for this we will give deductions, two types of deduction. First is standard deduction. Standard deduction is 30% on NAV. NAV is 5,60,000. On that 30% if you give deduction, it will be 1,68,000. So 1,68,000 if you give deduction, the remaining balance will be, we'll check. Before that second deduction we have interest on borrowed capital. For house A there is no interest on borrowed capital, so it will be 0. So after subtracting you will get the total taxable income, that is 3,92,000. Now we will calculate for house 2. So house 2 MRV is 12 lakh, yes FRV is 7 lakh 20,000. Compare both of them, whichever is higher, 12 lakh will be compared as 12 lakh will be considered as notional rent. 12 lakh will be compared with 6 lakh rupees. So 6 lakh and 12 lakh, whichever is lesser. 6 lakh is lesser, 6 lakh will be considered as reasonable expected rent. 6 lakh will be compared with actual rent. Actual rent with rent received is 8 lakh. So 6 lakh and 8 lakh, whichever is higher, 8 lakh is higher. 8 lakh will be considered as gross annual value. From that we have to deduct the vacancy period loss. You will get GAV after deducting vacancy period loss. From that you have to subtract the municipal tax paid. So municipal tax paid for house 2 is 1,20,000. So 1,20,000 I will subtract. 8 lakh minus 1,20,000 will be 6,80,000. From that 30% I have to give standard deduction. 6,80,000 into 30% will be 2,04,000. So 2,04,000 is the standard deduction. 6,80,000 minus 2,04,000 will give you 4,76,000. Now third plot is SOP. So till NAV everything will be 0. SOP ಅಲ್ಲಿ NAV ವರೆಗೂ ಎಲ್ಲ ಕೂಡ 0 ಇರುತ್ತೆ. So there is no standard deduction because there is no NAV. So 30% of 0 is 0 only. But interest on borrowed capital we have to give because he has taken 7 lakh interest. Okay. Sorry, 7 lakh rupees loan and 12 lakh interest. So now we have to calculate that interest on borrowed loan. So first is pre-construction interest. So pre-construction interest is 0 because the loan is taken on 1st April 2022 and there is no information regarding the construction of house. So pre-construction interest is 0. So we have to charge previous year interest. Our previous year starts from 1/4/2022 to 31st March 2023. So 7 lakh into 12% will be 8 lakh 84,000. So 84,000 is the previous year interest. The step 3 you have to find out total interest deductible. So it is pre-construction interest plus previous interest. Pre-construction interest is 0. Previous year interest is 84,000. 0 plus 84,000 will be 84,000. So 84,000 is the interest deductible. So we will get the deduction of 84,000. So 0 minus 84,000 will be minus 84,000. So we have two houses giving profit and one house loss. So now we have to set off the losses. So in my last video, I have taught you how to set off the losses. First, write the profits and losses, income and expenditure from all the houses. First house, it is 3,92,000. Second house, it is 4,76,000. Third house, it is minus 84,000. Now we have to find out the loss. So 3,92,000 plus 4,76,000 minus 84,000. If you do, the total income you will get from the income from house property, that is 7,84,000. This is how you need to solve the problem and set off the losses. Hope you have understood how to solve this problem. In my next video, I'll come back with some more videos related to income from house property. Thank you for watching the video. I'll come back with the next video.